From the morning reading. On the S&P 500 snapshot, the Trump rally takes a pause. On a day with no economic news, the S&P 500 hesitated at the open before rising to its 0.20% intraday high about 30 minutes into the session. An intraday record high, to be sure. The index then sold off to its negative 0.32% intraday low early in the lunch hour. It spent the afternoon in an extremely narrow trading range, drifting a bit higher during the final hour to its 0.11% negative close. The S&P 500 has finally popped out above its Bollinger Band on a daily basis, and the weekly and monthly. The band is a measure of average prices and volatility and takes a big push to get prices above and below its band at any time frame. The fact that it's above all three is an extraordinary display of momentum, and by the time it gets to this level across time frames, the index usually takes a break in the shorter term. The push isn't just in the S&P. Along with that index, the three other major stock averages also closed the week at an all-time high. Such coordinated bullishness has led to choppy markets going forward as buyers rest. Why aren't investors buying gold? The metal's in the midst of a miserable 5-week losing streak, which has rubbed more than 10% off its value. That's among the largest losses over a 5-week losing streak for gold. Its returns going forward were spotty, but at least over the next 2 months, it was higher every time. Stocks closed at a new high, but on negative breath. There were actually more declining than advancing securities on the New York Stock Exchange on Friday. The last time the S&P 500 fund, the SPY, rallied at least 0.5% to a multi-year high on negative breath was March 24, 2000, the peak of that bubble. All 8 days this has happened led to give back and recent gains over the next 1 to 2 weeks. Financials have been unstoppable. In the sector, 73% of stocks are trading at a 52-week high, the second most since at least 1990, behind only February 13, 1997, after which financials lost more than 3% over the next couple of weeks. That has been a consistent pattern after huge spikes in the number of stocks moving to 52-week highs at the same time. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:03 a.m. Mountain Time, and I'm recording this in preparation for the market day of December the 13th, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. Okay, let's go ahead and dive into our morning report. And at the time of this cut, we've got a bit of bullishness coming out of all 4 of the U.S. broad-based indices. S&P futures are up about 0.4%, as is the Russell and NASDAQ. Dow also up about 0.4%. Crude oil continues its build, up also about 0.4%. Euro is rotating right around scratch. Bonds are up about 0.5%. And gold is down about 0.4%. In overseas action, China and Hong Kong are both just above scratch. Japan up about 0.5%. Germany up about 0.2%, and United Kingdom up almost as much. In terms of macroeconomic reports for today, of note, in the United States, you have import prices. And that's it. Well, this was such a long report, I didn't have room to put Wednesdays on there. In terms of current volatility conditions, we did get a bit of a rise recently. Short-term VIX is 12.25. Skew still benign. IV percentiles are up off their very low numbers of yesterday, but still very low. The S&P is at a 10, the Russell 21, the NASDAQ 11, and the Dow at an 11. We did have a standard deviation size move put in by the Russell yesterday. It was a -1 standard deviation move. In terms of the current charts, you can see our S&P futures, and we're right now Not as high as yesterday's intraday high, but if we were to close here, it would be a new closing high. So things have been relatively strong, both in the overnight and in the short-term pattern. And again, we see this short-term pattern after the undercut of the area of support and the huge bullish rebound. It has been parabolic ever since, and while the candles are not quite as large in the last couple 3 days thus far as we had at the beginning of the short-term move, it's still quite bullish in the short term. In the Dow, you see right now we're about to take out the all-time high on an intraday basis, and even more bullish still than the S&P. And then also the Russell. Russell had a bit more of a real retracement in recent days. And you had the doji followed by the confirmation reversal. And thus far today, though, short-term action is positive. You can see this. We're watching this lower part of this channel to see a break, to see if we could start to see something that's a bit more normal in a pattern in terms of just the huge angle of action here. This short-term pattern here, even more bullish than the S&P and the Dow. The short-term action here, we do have a bull flag setting up. Expectation is any retracement would be relatively mild and then off again to the next bullish leg. And let's see, what else do we have? NASDAQ. NASDAQ has been the one that has been the weakest of them, though has gained some ground in recent action. And you can see we are trading up near the area of resistance. The NASDAQ, the only index that has not broken through this area of resistance. So much improved of late, but still not participating. Crude oil. Crude oil, of course, had the huge action yesterday, went up to 54.51 and then backed all the way off, but is still above the old area of resistance, and price action thus far seems to be building on yesterday's close. I saw a report today predicting $75 a barrel crude oil in the not too distant future. Obviously, from a probability standpoint, we know as option traders that's pretty remarkable statement, but yet at the same time that there would be an expectation of general bullishness on the price of oil given efforts, maybe not yet reality, to cut production and rein in some of this glut of supply could be in play, and certainly that could be causing sentiment here to move higher. In terms of the gold market, we see this continuing weakness to continue to kind of push down. And we'll see if we can get another leg down on that. Also, another leg down on the bond market. You see it pushed down during the intraday yesterday, actually closed up for the day, but it continues to ratchet the price action down into the lower 147 handle now. It was not that long ago, just summertime, that we were at 177. So this is a huge move as a percentage in a very large market. There's more capital traded in bonds in each day than there is in the U.S. equity market. And then let's take a look at, let's see here. Volatility still down here in the bull market normal range, and everything between this 12 to 15 we generally consider to be just noise. Nothing really that is challenging that premise yet. That should be enough on the charts. Let's go ahead and go to the daily report. We'll continue to have very, very strong bullish reports coming out with some areas of caution, we should say. We are market phase 4. This is bullish. Price patterns near resistance and extension patterns. And the 3 market timing signals. The first one from IBD, confirmed uptrend. The second one from GMI Index, a perfect 6 out of 6 and 8 out of 8. That buy signal also has been in place since 11:10. The third one, the Stock Charts Decision Point Scoreboard, no change since Monday's report. But short term, all universally bullish. Intermediate term, 7 of the 8 signals now are bullish. Really, the only sticking point is in the long term with the mixed signals. The position sizing opinion, both models are at 100%. Intermediate term market postures are all exceptionally strong. And they're also supported by this exceptionally strong bullish sentiment line. So really nothing here that would call for any kind of serious retracements unless you're just really going to go against the probabilities. Hedge warning status 0+, normal with some elevated conditions. In terms of the 3 strategy opinions, nothing has changed from yesterday's report on that. Primary thing to keep in mind here is that we are trading up against, with the NASDAQ up against an area of resistance, and with the other 3 indices in these, kind of bullish extension type patterns. So we've been parabolic, really, and those 3 indices, the S&P, the Dow, and the Russell. So very difficult to be adding significant number of positions as entry points at this point. If you're going to put something new on with a covered call, consider somewhat conservative 1-to-1 ratio of the out-of-the-money strikes versus in-the-money strikes, and the same thing with the low beta and high beta. In terms of specific areas of warning, we did have some warnings fire yesterday from the volatility area, market in decline, sharp increase warning, and a volatility ratio warning, all fired with yesterday's action. Though let's keep this in mind, this is all within the context of a very low vol. So, these are subtle increases in volatility within a normal bull market range. So these aren't as dangerous as they were earlier when we had, volatility peaking up and really getting up in above 15 for sure. Distribution day count at a 6 continues to stubbornly hold on to a relatively high level with the NASDAQ, though this has been slowly improving. You can see the S&P count is very, very low, only 2 in the last 30 trading sessions. Everything else looks normal. Trend-based area looks all very nicely bullish. Key intermarket risk aversion indicators are 3 of the 5 are in the risk-off stance. But none of these have good angle and separation either to the off or on side. We'll continue to watch and see if this will resolve itself one way or another. Really, the overall position here is probably best described as neutral. From sentiment standpoint, some of that short-term excessive sentiment was scrubbed off with yesterday's action. We still are somewhat elevated on the intermediate term. You see the fear and greed index is elevated in the extreme greed area at an 87 and is even a tick higher than it was the day before. From a sector-specific standpoint, you can see telecom, real estate, utilities, and healthcare and consumer staples. So 1, 2, 3, 4, 5 of your defensive sectors all in the top 6 positions in terms of performance yesterday. So with a little bit of weakness in some of the markets yesterday, the defensive oriented definitely took advantage of that and were the star performers of the day, whereas much of the risk on behavior that's been contributing to this parabolic move, the financials, consumer discretionary, and even industrials, were the ones that gave it up yesterday. And you see breadth was considerably weaker there as well. Intermediate, short, and long-term market postures, though, pretty healthy across all these different sectors. Only healthcare holding on to a long-term intermediate and a long-term market posture as being negative. And you also see the performance for the multiple time frames and pretty much getting into be a sea of green where everybody's being lifted up. Really, healthcare is probably the most struggling sector at this time. Kind of keep an eye on that. If there's anything in your watch list that you're currently working from healthcare, it is certainly been consistently the weakest performer. Okay, that should be enough for today. Let's go ahead and roll on. Now I'll just scroll through these. You see something you need more information on, just hit the pause button and gather the information from your slide or from the hyperlink that takes you to even more detail. There's a lot of stuff here. Talking about a lot of stuff. There's a whole bunch of information packed into those daily price guides. Be sure to check those out if you are an intraday trader of any type. Disclaimers as always, hit the pause button if you need more time to review the disclaimers. Also note the hyperlink down here at the bottom of the slide for the full set of disclosures. We should be back here for our next Falcon Global Market Preview with tomorrow's session. In the meantime, manage that risk profile and seek to go out there and learn something about your chosen craft, trading and investing every single market session. Good trading.